Well, thank you very much, everyone, for joining in. I'm not sure if Matt's still in the room, but a great first presentation. Thank you, Matt. And, he did all the macro talking, so I don't need to, so thank you very much. As Dave said, my name is Jonathan French, Director of Investor Relations from Foran Mining. We're a 600 million market cap company on the TSXV, trading under the ticker FOM. And our goal here is like it's on the front slide here, is to deliver zero carbon copper in a top jurisdiction in the world. So this is what the project kind of looks like right now. We're currently undergoing an underground or an advanced exploration decline program. We have a box cut and decline going. We're going 1,400 meters underground, getting towards the ore body, and getting ahead and getting prepared for a formal construction decision sometime next year. So when looking at Foran, this is probably the most important slide to look at. We have a three-pronged strategy. The first is to deliver initial phase production at McIlvenna Bay Mine in Saskatchewan. We put out a feasibility study earlier this year, 4,200 ton a day, 18-year mine life, 65 million pounds of copper equivalent production at an all-in cost of about 90 cents a pound. Initial capex, $368 million, and if you look at it at spot pricing, it's about a 1.1 billion NPV pre-tax. As we're going along the permitting and financing milestones, we're also actively exploring, and the purpose here is to define and expand our known mineralization. The way we look at McIlvenna Bay is looking beyond just the 4,200 tons a day and really trying to build Canada's next big mining complex. Starting at 4,200 and growing over time, I think we have a lot of opportunities to expand the resources, and some of them are actually near close to our mine. We're looking forward to. I'll share some of the information with you later on that. And all of this is under the third prong, which is our net positive business. This is where we're talking about trying to achieve carbon neutral production, and kind of what Matt was alluding to. If you want to be pro ESG and pro mining, or pro ESG, you need to be pro mining these days, because whether it's the TVs, whether it's your baby monitors, the chairs you're sitting on, you need mining to support not only everything else in the world, but the EV and the electrification of the world here. I think what also helps Foran stand apart is our shareholder register and some of the partners that we've worked with long term, or we're going to be working with long term. Most recently, we have announced a transaction with Ontario Teachers Pension Plan for up to $200 million for 20% of the asset. They want to own 20% of McIlvenna Bay and be a partner with us long term, because they see the opportunity not only that we see here, but also the decarbonization and how critical these metals will be long term. Fairfax is also a 25% shareholder on a fully diluted basis. They've been a shareholder since last year as part of a $100 million private placement, and more recently they early exercised $33 million worth of their warrants to further supporting our cause, and we're very fortunate to have them as shareholders, as well as Pierre Lassonde, who's been a shareholder since 2009 and owns approximately 6% of shares. So turning to our project, McIlvenna Bay, north central Saskatchewan. It's about 65 kilometers west from Flin Flon, where they've been producing for over 90 years. And the reason why we haven't been producing as long as they have, and we hope to eventually get to something similar to that, would be spectacular, is that they outcrop. Their mineralization, their VHMS deposits outcrop, whereas ours has been undercover. It sort of dips to the west. So it's taken us a little bit longer to get towards the stage we're at right now, and we kind of considered ourselves a 20-year overnight success story. So turning to jurisdiction, I think this is still one of the underappreciated risks when it comes to investment horizons and investment hurdles. People understand that majority of production will be coming from South America. Some of these are higher risk from a fiscal regime, but also, talking about energy intensity regimes. People understand it, but people aren't valuating it in either their cost of capital or their valuation multiples. Saskatchewan is actually number 2 globally when you look at the Fraser Institute, and we're very fortunate to be a part of such a renowned jurisdiction. For your context, Saskatchewan, 1.1 million people live there. It's more of like a little family than it is a big province, and we're very fortunate to have good relationships with the government and be a part of their family. So just turning to VHMS deposits, as you see here, some of these large camps in Canada, the Flin Flon, Noranda, even down to Laurent, they've been producing for plus 30 years, some almost a century long. And basically what we're trying to accomplish here is start initially with an 18-year mine life, explore and expand, and hopefully get to this multi-decade production profiles that we see at other camps. And as you can see here, these are the targets that we will be drilling, and we have been drilling actively. In the purple rectangle there at the center is McIlvenna Bay. That's kind of the main core trend. In the red circle on the left, we have a 4 million ton deposit at Big Stone. But the real focus has been around near mine deposits. Some of those red stars there you can see, Ampere, Faraday, Hertz, all named after scientists tied to electricity. The reason why I kind of prelude that is our most recent and exciting one has been named Tesla. And as you can see here, the orange blob at the bottom is our McIlvenna Bay deposit. It's about 40 million tons, but the reserve life right now is 25 million tons. Just 300 meters away to the north, we've discovered a new target called Tesla. Some interesting initial results, 12 meters at 6% copper equivalent. The geophysical conductor is about 900 meters in strike, 300 meters wide, and if you extrapolate how it would look compared to McIlvenna Bay, it could potentially be a same tonnage similar to what we have already at McIlvenna Bay, just 300 meters away. This is still very early stage, something that we need to do a lot of work on, but it's just showing the concept and opportunity we have here, not only across our large land package, but even right next door to our current mine. And here, just kind of highlighting how underexplored our properties have been. If you look at some of those large camps that are owned by well-capitalized firms, there's about 10 to 20 times more drilling been done, and 2 to 15 times more resources have been discovered to date. We, with $80 million, we're well-capitalized to start and continue our exploration to catch up to these guys, and we believe that over time we will start to see the resource growth and production profile expansion that we envision. And just touching on where we'll see some of this exploration upside, the orange bars here are resources prior to production. The blue bars are resources once you're in production. McIlvenna Bay is open at depth and along strike. We're already a kilometer deep. And from a NAV accretion standpoint, it doesn't make sense to drill a 2-kilometer hole to add production profile at year 17 or 18 on your mine life. No one's going to pay for that. Our best opportunity to add value is from regional exploration and finding stuff closer to surface that we can expand our production profile as well as our capacity more sooner than year 17 or 18. Just quickly on the feasibility study, these are the key metrics here. 4,200 tons a day. Like I said, $368 million initial capex, 90 cents a pound all-in costs, and at spot prices, it's about 1.1 billion pre-tax NPV. This slide here, I just wanted to kind of touch on. A lot of the projects that are being built, have been built, or are looking to be built require significant sums of capital. Some that have recently been Quellaveco, QB2, multi-billion-dollar projects. Baimskaya in Russia probably won't even get built, but I think that's a $12 billion capex program. The way we like to think about it, and trying to use a golf analogy, is if you use your driver and if you're off by 10%, you might be out of bounds or in the water, and you're starting on the back foot. Whereas McIlvenna Bay, we like to consider ourselves your trusty 7-iron or 8-iron, where a 10% miss will have you in the rough or maybe on the fringe, and you can still manage par. So, being a top quartile asset on a capital-intensive basis is something that makes us very, very interesting. And just finally, our third pillar, just on the ESG standpoint and carbon neutrality. Everyone's pushing for it, whether it's governments, whether it's investors. People want to see it. It's not the most cost-efficient use of capital, I guess you could say today, but longer term, we know it's the right thing to do. We want to be part of the solution, not part of the problem. And I think longer term, it will lead to superior investment returns for all stakeholders. And this is kind of how we look at it and envision getting a carbon neutrality. Power being typically 2/3 of your carbon emissions on your asset. We will be able to claim renewable power from the Island Falls Hydro Dam just north of us, and that will alleviate a significant portion of our carbon emissions. We're also going to be having an electric vehicle fleet underground. As it sits right now, it'll be one of the largest ones in Canada. We're also looking at other methods, other levers to pull to get towards that carbon neutral and eventually pushing to carbon negativity. I think it's something that's very difficult to do, and it's something a lot of people are trying to do, and it's something that we are fully focused on achieving. And like I said before, it's not right now the most cost-efficient thing to do, but we think over time it will lead to superior terms, not only on cost to capital basis, but people will want to pay premiums for greener metals. And just a quick cap table here. Like I said, Fairfax 25% shareholder. With them, Pierre Lassonde, as well as our CEO Dan Meyerson and our executive director Darren Morcombe. Insiders own about 41% of our stock. We think this registry is a big component to why we've been a relative outperformer year to date and hope to be in the future. For upcoming catalysts, we'll be providing updates on our advanced exploration decline program, photos as well. Exploration will continue, especially in the wintertime. We're going to be hitting the Tesla deposit much more aggressive than we have been in the past. So look for results there. On the permitting process, we'll be providing updates, looking to get full permits next year and project financing actually completed before the end of this year, which will lead us into a formal construction decision sometime next year. TSX uplisting will also happen next year, and along the way we'll be providing more updates on our net positive business and all those levers we're looking at to pull to get towards carbon neutrality and improve those green premiums. And that's it for me. Thank you very much all for your time.